Could Bitcoin go to over $20,000 in the next 10 months? In this video, I'm going to go over two different scenarios that are probable, and I'm going to show you what to watch for to know what's going to happen, all right? Bitcoin went up 1,350% in 2017, and it could easily happen again, and I'm going to show you how, so stay tuned. Welcome back, market disruptors. Welcome back to another Thursday episode where I talk about investing. We talk about Bitcoin, cryptocurrencies, other disruptive technologies. Tuesdays, we talk about just general success in business and so forth. But Thursdays is the day that I bring you the investing Bitcoin and whatnot. We are going to talk about today Bitcoin getting back to $20,000 in the next 10 months. I'm not saying it is going to happen. I'm not saying I predict that to happen. What I'm saying is that it's probable that it could happen, right? So we have to understand what that means. Predictions are like guesses, right? We don't know. That's gambling. I'm going to throw that out there. I'm going to gamble and I'm going to guess, right? I look at probabilities. So we'll look at like, here's a few things that could happen. And so getting it back to $10,000 or $20,000 is something that could happen. First, what I want to talk about is the probabilities versus predictions. The way that the CIA operates, the way that they make decisions is that they're always running assessments, right? They're always assessing threats, but they don't predict these things will happen, but rather they're constantly assessing them, and they're assessing the probabilities of if that's going to happen. They're always running like if this happens, then that happens. So they're running scenarios, and these are probabilities. There's something called the Bayesian Approach, and this is what they do, the way the CIA operates. So it's kind of like a decision tree. They look at all these different courses of action, all these different things that could happen, and then by mapping that out, it gives them clarity of what could happen. They have like the interactions between like the present decision alternatives, uncertain events. And then what they do is they use that to depict a series of like true-false sequences. If this starts to happen, then this is most likely to happen. But if this starts to happen, then this is probably going to happen. So, for example, if you follow like technical trading, if Bitcoin drops below 3,200, it's likely to go to 2,800. However, if Bitcoin jumps above 5,200, it's likely to go to 7,500, right? And really, we're watching the signs. So we know there's two different things that could happen. And we start to look at the signs of both. And as we start to see more clues down each of those probability trails, it tells us what's going to happen. You want to hold a party. You know that there's a 40% chance of rain. Problem is that it takes a lot to get this party set up. And once you get this whole party set up, it can't move. So once you've made your decision, you have to stick with it. So you can either have the party outside with a 40% chance of rain, and potentially get rained on, which would be no good. Or you can move the party inside. So those are your things, right? The chance event is that there's rain or there's no rain. So that's like the decision tree. Up on the screen, we have like inside and outside. And under inside, we have no rain or rain. And if there's no rain and they're inside, there's discomfort and regret because they wish they were outside. If there is rain, they're happy because they're inside. If they're outside and there's no rain, they're comfortable. But if they're outside and there is rain, it's a disaster because they're all outside. They're being rained on. So that's like the decision tree. What we want to do, or what the CIA does, is then they start attaching numbers to those or probabilities. So then we say, all right, so there's 4 different probabilities, and we'll start putting scales to those. So like in this example, we said there's a 40% chance of rain. On a scale of 1 to 10, how discomfortable will they be if they're inside? How uncomfortable will they be if it starts to rain? And we start attaching numbers to those. And by that, now putting numbers on those, we say, okay, it's more probable for us to go this direction than that direction. So we say, okay, this is the path that's most probable. This one has a 60% chance of going this way. However, if I start to see the signs going this way, then I know that I need to shift over, all right? The overall market. So we know that the long-term forecast is that there's a massive crash coming. The market's super fickle right now. So scenario number 1 is a massive crash, kind of like the 2008 crash. And basically what would happen is that the markets would go down by about 80%. And I think that would be down 80% by like 2021, 2022. We would see the S&P index crashing the NASDAQ. And I think, like I said, all global markets would go down soon, right away, this year. So one of the indicators I'm looking at is the S&P. And so the S&P index, it needs to hold about 2,300. If it holds it early, I think there could be like a bounce in April, and then we'd see a crash after that. Scenario number 2, more likely to keep going, allow this bull market to keep going. Now, last year, the stock market made bubble history. I mean, it's the longest running bubble in history. Now, average bubbles go about 5 or 6 years. This bubble is about 10 years in right now. At the end of last year, at the end of 2017, there was about a 24% correction in the market, which officially ended the bull market, but now we've bounced back from that. A lot of people were saying, look, that's it. The market's done. The analyst looked at the charts and said, we've reached our all-time high. We've hit the Fibonacci lines. We're going to retrace. It's going to crash. However, from a fundamental investor standpoint, I kept saying, I don't think this is it. I said, I don't think the market's going to go out like this because we haven't seen a lot of these signs. Right? This is the biggest bull market in history. And when markets like this go out, they go out with a bang. They go out with a bang. They don't go out with a whimper. Boom, and then they crash. Scenario number 2, which I believe is more probable, is that we have one more blow-off top rally. One more parabolic run, because we just haven't seen that yet. Probable, not predicting, but it's probable that we have another 50% run-up in the stock markets over the next year. A 50% run-up. And what this does is this is tracking this 90-year cycle. It's a bubble burster cycle. So you have these bubbles that build and build and build, kind of like the chart is showing you. And on a 90-year cycle, they kind of come together, and we see all these bubbles come together and burst at the same time. And I think that's where we're tracking. And it also goes along with this 45-year innovation cycle. All that's coming together right at this mark. And I think it could be, like I said, one of the biggest crashes. However, I'm expecting to see this massive run up before that. What does that mean for Bitcoin? What happens to Bitcoin if the market rallies? I'm not trying to predict the timing. I'm watching the signs unfold. We do know that the market for Bitcoin dropped from $20,000 all the way down to about $6,000. So that was over about 10 months. In November, it dropped again another 50%, and it dropped down to about $3,200. That was mid-November. Now, where do we go? What happens as this continues to unfold? So what I think is that back to the internet cycle, we know that, from 1990 to 2000, it looked kind of like a hockey stick. And it was really that last 2 years from 98 to 2000, that was that parabolic portion, the blow off top before it crashed. But then we had another run up. And it looked like with that crash that we had in Bitcoin, the bottom target was about 2,600, which we never quite got there yet. And these are all just kind of average numbers. What I think is that I believe at this point, we'll see what happens next month, but at this point, what's more probable is that we still have this blow off top in stocks to happen. As that happens, we're going to see this extreme hype bubble, and it's also going to carry over into Bitcoin and cryptocurrencies. And we're going to see this hype bubble in Bitcoin as well. And then, just like the internet phase, we'll see it continue to grow out into 2037, so like another 18 years after that. Remember, we've talked a lot about Amazon. It went from $1 to $80, went down to $5. And then eventually, 17 years later, it went from $5 to $2,000. I expect the Bitcoin and cryptocurrencies to do the same thing. I think it's going to track this, the internet cycle on like a 17 to 18 year lag. That's what I'm expecting. But for right now, if scenario 2 happens, what I think is that the stocks will rally into 2019, and then Bitcoin and cryptos are going to follow. I think that probability if the stocks do have this blow off top like it's looking like right now, I think Bitcoin could easily get back up to $21,000. That's setting a new high. Really, it could get back up to $30,000, so somewhere in that range. And it's not really that unlikely. I mean, Bitcoin went from $1,350 up to almost 20,000 in 9 months. So that's definitely possible that could happen. We've seen, this whole first quarter of 2019 has been a massive rally. And right now the bulls have the upper hand. We know the signs that we're looking for right now. I've given them to you, and now we're watching. I don't put $20,000 Bitcoin out of the question by the end of the year. All right. So hopefully that sounds good to you guys. If you like this video, give me a thumbs up. I don't typically get into technical analysis. The reason why I brought this is because it's a little bit of fundamental with some chart reading for you guys. So give me some thumbs up if you like it. Give me some discussion in the comments below so we can get into that and talk about it. If you don't like it, give me a thumbs down. Either way, I want to know so I know what content to bring you each and every week. All right, that's it. To your success. I'm out.